Hello everyone, Rich here and welcome to a new episode on how to analyze any chart from scratch. Today we've got USDJPY, a forex pair as per your request in the comment section of the previous videos. Of course, previously we covered a commodity, silver, we've covered a crypto asset, a stock, and so on. So you can apply it on any instrument. I'm trying to cover as many cases as possible. So in the comment section, feel free to request any instrument or even any topic that you would like me to cover. So let's do it. As you can see, we have our baby RichTL on the chart to make objective technical analysis, and this is what we call objective swing lows and highs. You can check the website richtl.com to get it, the indicator, the full course, the weekly overviews, and also the group where you post your charts for review. So it's an entire package for lifetime access, all inclusive. This is all you need in one package. Anyway, check it out. For now, here's a practical example on a forex pair USDJPY. As usual, we start from the higher time frames like H4 and above to get a feeling about the overall market. Are we overall bullish? Are we bearish or stuck within a range just like USDJPY? We don't have a clear direction because once you know where you are in the market, you know what to look for. I'm looking for a sell or for a buy, of course. If you are in the middle of nowhere, of course, this is a no edge or no trade zone. So let's do just that on USDJPY. I don't need to zoom into multi-time frame because I can't really see much and I don't really care about this overall bullish channel. Anyway, you can draw it. But for now, let's focus on the structure on weekly time frame. You can clearly see that we've got a support and resistance here, multiple rejections from this area, right? Simply by connecting the dots, or even if you don't have the dots, you can see previous high, broken upward, became support, broken downward, and now it's acting as a resistance. Let's go for green, for example, for this one. It doesn't really matter how you draw it because we will not buy or sell blindly around the support and resistance. It's just for overall direction to get a feeling about where we currently are. That's the first one. The second one, you can clearly see it, I guess, from the dots at least, is this one here. We've got multiple rejections here, broken upward, became support, and support again. Lately, we've retested it, rejected it, and so on. So this is why I'm mentioning that USDJPY is currently within a range. And of course, if we break the range upward and push higher, we've got this previous major high, which is also a very strong supply zone because we had a massive drop from this area, which is still fresh or untouched or not filled. Well, however you want to call it. So this is where we are for weekly. Make sure that they are visible on lower time frames. Okay, I'm not really sure why I don't see it. It's weird. Anyway, I can see it for one, but I can't see it for all. Perfect. Just make sure that they are visible on lower time frames. Perfect. That's it. Once you know where you are, as mentioned previously, you know what to look for on lower time frames. For example, here around the resistance zone, previously support, and so on. We are now around the resistance, so we are looking for a sell unless, of course, it's broken upward, then it will become support again, and we'll be looking for buy setups on the retest. But currently, as long as price holds around this area, we are around a resistance zone. This is what we need. I don't really see anything from daily time frame except that previously we were bearish. Now we are bullish. We can see it even better from H4 time frame. We have been bearish starting from here. Then we had a bullish correction here, and then we dropped all the way back down. And after breaking above this objective high, we became bullish again. Now, I want to highlight or to focus on the latest price action. You can see that we have been bullish, making higher lows and higher highs. You can even extend it a little bit to cover this previous minor wick or minor low, and also the same applies here. We are overall bullish, as you clearly notice. I like to go for blue for H4 time frame, but of course you can pick the color that suits you best. Perfect. Around the resistance, around the upper bound of this rising broadening wedge from H4 time frame, which is adding one more layer of confluence to be looking for a sell. Even if you break it a little bit upward and we are still within this resistance zone, we'll be looking for shorts unless, as mentioned, we have an aggressive break from daily time frame or even weekly above this zone. In this case, it will become support. But for now, everything is lining up. The higher time frame, the medium term time frame on H4. So it's great to be looking for shorts. If you zoom in, for example, to H1 time frame, we have something forming, but I can see it objectively better on N30 time frame. This is my neckline as per our rules. Perfect. So as you clearly see, previously bullish, higher lows, higher highs, then the low objective low has been broken down, and then we became bearish, low lows, lower highs, then the objective high has been broken upward, and we became bullish since then. So we are bullish, which is the impulse within this H4 rising broadening wedge, as we saw it previously, and this is the correction phase. Now we're expecting what? A correction phase from H4 time frame. So the trigger would be just like previously, for example, a break below the low. Of course, we have sorry. Okay, sorry about that. Of course, we have customized patterns and so on, but we can go for the basic ones like a double top, head and shoulders, trend line, and so on. But let's keep it simple for now. We can see that we have something forming like a double top or any pattern that you have on your watch list. In my case, I put an alert just right there, and then I'll be selling this one once it's broken down. I'll be targeting the lower band, or you can go for a fixed risk to reward ratio. It depends on you. I will not dig deeper into these ones. I have it entirely in the course, but of course, make it a positive risk to reward ratio, of course, because it doesn't really matter how much you win. The win rate alone doesn't really matter. What matters is how much you win when you win and how much you lose when you are wrong or when you lose a trade. So that's basically it. For example, I would go for a sell after a candle close on M30 below this one. The stop loss would be around the previous major high, which we don't really know where yet. And we target, for example, at least a 2-to-1 risk to reward ratio to have an edge over the market from a risk management perspective. This is what we are waiting for to confirm that the bears are strong enough to start the correction movement just like this. And meanwhile, USDJPY can still push higher and higher. In this case, I'll be looking for new patterns to look for a sell, as long as I mentioned previously, as long as this one holds. That's it for today. Best of luck, and I'll see you hopefully on the next episode.